Hey guys, Sean here. Welcome to my channel. Now, unless you have been living in a cave, you probably realize that things are getting much more expensive every single year. Or maybe you're paying the same price but getting half the normal toilet roll of potato chips, right? Now, inflation is a hidden tax that we are all paying and it's eating up our savings, forcing us all to invest if we want to maintain our purchasing power and grow our wealth. There's not much point to throw your money into a savings account that gives you 0.5% of interest or less when inflation is anywhere from 2 to 5% easily. And this situation is only gonna get worse, guys. Just in 2020, the Federal Reserve has printed an astounding $3.5 trillion. That's almost 20% of all US dollars in circulation, and they aren't stopping anytime soon. That means there'll be more dollars chasing fewer goods, causing quite a bit of inflation. So as an investor, you might be wondering, is the stock market the best place for me to put my money in? Why don't I just take all my savings or my investment money and dump it into equities? Is that the right move? However, I think we have to take a closer look, right? A lot of the PE ratios today are some of the highest in history. Valuations more or less have left the realm of reality, and picking the right stock is almost like playing a roulette wheel in the casino. Not everyone has enough money to buy capital-intensive assets like real estate or farmland at one go. And this brings us to Bitcoin and gold, right? Two assets that have been compared endlessly with each other, but they serve very, very different purposes. And both of them have been also called a store of value and the way to protect wealth. But what is the truth? Now, on one hand, we have gold, a time-tested asset, versus Bitcoin, the new shiny kid on the block that has created millionaires and billionaires from early believers. But what about today? Where should you put your money in? Now, before you decide on one, we need to go through quite a few things you need to know about Bitcoin and gold and how different they actually are. But firstly, what is gold and Bitcoin? Now, here are the cliff notes. Now, firstly, gold has been used as money for over 3,000 years, from the time of the Roman Empire up to 1971, when the US dollar was no longer backed by gold. It is a physical metal mined from the earth that everyone across cultures and time have trusted to store and transport wealth, especially during times of crises such as hyperinflation or war. Now, today you can find gold as investable coins or bars as well as beautiful jewelry, right? And from 1971 to today, gold has risen from $35 to $1,800, and that's a 50 times increase in around 50 years. So what about Bitcoin? Now, Bitcoin is a cryptocurrency that was created in 2009 by Satoshi Nakamoto, right? Now, don't ask me who he is. No one in the world, even till today, really knows who he is. It is created on the blockchain, and as a decentralized digital currency, it's quite near untouchable by governments or institutions, right? You can transfer a Bitcoin to anyone in the world without any restrictions at all. And that is powerful. And oh yeah, Bitcoin went from $1 in 2011 to over $60,000 in just 10 years. Now that's a lot of gains. But before you sell your house and pump everything into Bitcoin or gold, you gotta know that they're different, and I personally own them for very different purposes. Now, the first thing I want to touch on is that the value of gold is different from the value of Bitcoin, and I don't want to really go into the argument that energy use is something that gives gold or Bitcoin its value, because it's fundamentally not true. Gold is similar to Bitcoin in a sense is that there are mining costs associated with both of them. For gold, it is the energy and labor costs needed to mine it out of the ground, refine it, and stamp it into a bar or coin. For Bitcoin, it is the amount of electricity needed to run a computer mining systems in order to get a Bitcoin. But just because something requires energy to run doesn't mean that it's automatically valuable, right? For example, I can take an entire week to build a giant sandcastle on the beach, but that doesn't make it automatically valuable. You know, I just spend a lot of time and energy to build it, but knowing my skills, I probably won't be able to sell it for a single dollar. But I believe that value comes from real-world utility. Now, gold has real-world utility, the weight of history as money, and it is physical wealth that you can physically hold. Now, I can go anywhere in the world with this gold coin and turn it into cash and buy stuff with it. It is 100% private wealth, and it can be as anonymous as I want it to be. And gold is a physical element that doesn't tarnish ever. That's why it is made into jewelry. Investors hold it physically to preserve wealth and has incredible industrial applications such as electronics and medicine. Bitcoin's value, I would argue, is different. Bitcoin's value lies in four main things, right? It is a digital cryptocurrency on the blockchain which cuts away any counterparties from the two parties transacting. Yes, a cap of 21 million units will makes it finite, which is very interesting. And it cannot be counterfeited due to its security, transparency, and more or less has the characteristics of money. Now, my opinion is that the primary difference driving its value is gold is physical and truly private wealth, while Bitcoin is still circulating in a financial system. Yes, you can transport it anywhere that you want and transfer it in an instant, but unless everything is priced in Bitcoin, which is not very feasible due to its volatility, you will still have to go through a bank to get converted back into dollars. Now that means not only are transactions still tracked within the blockchain ledger itself, but exchanges and banks all have your records of your blockchain transaction. But gold is a little different, right? I can basically go into a dark alley, sell it for cash, and no one will be the wiser. No one in the world will actually know besides me and the guy in the dark alley. Now, I personally believe that gold is a better store of private wealth, while Bitcoin is a fantastic transporter of wealth that can cross international borders in a flash. And the second thing I want to touch on is that Bitcoin is a more effective currency compared to gold. Now, while we can say that both Bitcoin and gold are stores of value, when it comes to which functions better as a currency, the winner I have to concede and give it to gold. The disadvantage with gold in this case is that it is physical and you can't really make purchases with it. It is not divisible, and when it comes to day-to-day purchases, you can't really buy anything with it without converting it into dollars, right? Bitcoin doesn't have that problem. You can divide them easily and spend fractional Bitcoins to buy things from merchants, right? And the amount of people accepting Bitcoin is growing. If I'm not wrong, you can even spend your Bitcoin on PayPal, at Microsoft, and if you have other apps, you can even spend it at Starbucks as well. Now, just recently, right, El Salvador approved Bitcoin to be legal tender in the country, which is an impressive small step ahead. But there's still a barrier for Bitcoin to overcome for it to be used as a currency when its average transaction fees, I think anywhere is between $10 to $50, which is quite a bit if you want to buy coffee, right? And it's this issue that's limiting its upside and its adoption. Physical gold faces the same problem. If you decide to buy it every day, you can lose anywhere between 5 to 20% of the physical premium of the coin or bar that you're selling to get cash, depending on whether it is a bigger bar or a smaller bar. Now, point number 3. Physical gold holds no counterparty risk, but Bitcoin does. Guys, if you want to compare Bitcoin and gold, we need to talk about security issues, right? Physical gold is considered a tier 1 asset that holds no counterparty risk, and it's so simple. You hold it and you own it. How complex can it be? It's so simple, and it answers to no authority. It's true private wealth within reach. Yes, you can store it within the third-party vault, but if you're smart enough, right, you probably have bought insurance for it, so if it goes missing somehow, you will still be covered. But for Bitcoin, unless you put it into a cold wallet, it's probably sitting in an exchange or hot wallet where you can receive and send Bitcoins easily, right? I mean, it's purely for convenience, and a lot of people do it. In the past, I used to do that as well. And that in itself is counterparty risk, right? Your coins can be hacked, or the exchange can suddenly vanish with your Bitcoins in some kind of vanishing trick, and hey, your Bitcoins are gone. And the only way, right, to lose physical gold, whether you hold it at home or in a vault, is by someone breaking in and taking it from you, right? The old-fashioned way. Now, the fourth thing I want to touch on is that gold is held by central banks while big tech loves Bitcoin. Now, one reason why I believe gold is a true store of value is simply because central banks all over the world are holding it. From China and Russia to the United States and Singapore, every sovereign country holds gold as a store of value. And since February 2020, China has been buying around 10 tons of gold a month, and that's only one country. Gold has value and the global powers know it. And I want us to remember 3 quotes from the Bank of International Settlements. They stated that gold is free of default risk, gold bullion is the only financial asset without any counterparty risk, and gold at home is not subject to political manipulation. Now, for Bitcoin, things are getting a little interesting, right? Remember when I said that I believe the true value of Bitcoin lies in its ability to easily transact and move wealth around instantly, as well as function as a currency, right? Now, public companies such as Tesla, Square, and MicroStrategy all have Bitcoin as part of their investment portfolio. And this is rather important because what this does is that it increases the widespread adoption and the confidence of Bitcoin as an asset as well. But things are getting quite interesting as Palantir has started buying gold to hedge themselves against a black swan event. If I'm not wrong, I think they bought around $50 to $60 million worth of gold, physical gold. Well, obviously it's not a lot of money, but it does set quite a bit of precedence for companies to trust physical gold as a kind of inflation or disaster hedge, right? And it's quite unheard as well for a tech company buying physical gold, but I believe that the shift might be happening under our noses. Now, this is a significant one. Bitcoin has a lot of competition compared to gold. Now, gold is a physical element that has real-world utility besides being a store of value and for investments. Now, over 50% of gold is used in jewelry alone, but for Bitcoin, it's just mainly used as a digital currency as a store of value. I don't think there's much other utility other than that. And this makes it quite vulnerable to many other cryptocurrencies out there. There are easily hundreds of thousands of competing cryptos, and some of the major ones such as Ethereum and Cardano have real-world applications that can be built on them. Ethereum, for example, can be used to build decentralized apps on it and to deploy smart contracts as well. And it kind of holds all the blockchain advantages that Bitcoin has. And this is one of the major disadvantages I see about Bitcoin, right? While it has the first mover's advantage and a greater brand name, my worry is that other cryptos might overtake it. Now, technology is always improving, and while Bitcoin could be today's hero, it could be second place just as easily tomorrow. Now, the sixth thing is that gold is more accessible across all socio-economic classes. It's quite amazing that not many people touch on this difference, but I have to point out the obvious, right? And no, it's not about how much bigger the gold market is compared to Bitcoin. That is quite obvious, but it's something else. Now, gold is simple to understand. Everyone from my grandma to central bankers understand about gold. You can buy gold at jewelry shops, you can buy coins and bars at a bank or bullion dealer, you can trade it with a third party or sell it away at a pawn shop. It is easy. Now, here is how complex buying gold can get. This is cash and I want gold. This is gold and I want cash. I exchange cash for gold. Ta-da! It's just that simple, guys. And anyone and everyone can understand this kind of transaction. Now, the issue about Bitcoin is that it is quite tedious to buy and sell, especially for people who aren't really digitally savvy to get things set up. In order to buy and sell Bitcoin, you need to choose a broker or exchange. You need to verify your crypto account. You need to deposit cash or link your bank accounts to invest. You need to actually buy the crypto, and at the end, you need to decide on a storage method, whether you want to store it in the exchange itself or whether you want to take it out of the exchange and put it into a cold wallet, right? Now, to all you crypto experts out there, it seems quite easy and brain dead to buy and sell Bitcoin. And right now, I've been buying and selling Bitcoin for quite a bit. I already know the steps on how to do it, but not everyone is as savvy as us. And I can tell you that in many places in the world where a lot of people, they are illiterate, not as tech savvy, and are unbanked, and a lot of them only transact in cash. For them, Bitcoin is just too complex. And this is a factor that can actually be both a pro and a con for Bitcoin. It is a pro because if this situation can be solved, if this challenge can be overcome, the upside for Bitcoin, at least on its price wise, is going to be quite phenomenal, right? But until that happens, gold is simple, and I have to say that everyone knows how to buy and sell gold in their own way. Finally, Bitcoin is more volatile than gold, and I don't really think this comes as a surprise to anyone who has been in the markets for any period of time, right? You know, almost every week you see a new headline about Bitcoin either making incredible gains or having a horrific fall. Now, as an investor, especially a long-term investor, this can be particularly frightening. I remember the first time that I saw Bitcoin fall by 20%, I had nightmares for 3 days straight. I couldn't eat, I couldn't sleep. The only thing I could think about is Bitcoin floating in my brain and me praying to God, hoping for Bitcoin to rise up by 20 to 30%. And this is something that you need to be mentally prepared for if you decide to buy some Bitcoin. You know, I understand that just because Bitcoin has risen from $1 to a high of over $60,000 doesn't mean that it won't go higher. You know, especially if it can get wider adoption as a currency globally. But the problem with Bitcoin's volatility is that there's still widespread doubt about its true value, right? Bitcoin is not really like gold where there's a physical component and intrinsic value in the real world. Its value is mainly driven by market perception and whether it is really a viable currency or a proven store of value. And ironically, it is this volatility that's kind of making it hard to be taken seriously as a stable store of value or really being used in the business world as a medium of transaction, right? You know, as a business, taking in a means of payment that could gain 10 to 20% in the next day is something that is going to be quite a harrowing experience for most companies, right? It's not stable at all. And the only safe way to deal in Bitcoin and secure your profits as a business is to immediately sell it off once you get it. And I mean, just think of how crazy it is to constantly reprice your products according to Bitcoin, right? You know, so one Bitcoin could be $60,000 today, and in 2 weeks' time, it could just easily drop down to $40,000. And businesses have to operate on certainty. Now, that's not to say that gold isn't volatile. I could easily see swings of 5 to 10% within a week, but it has proven over thousands of years to hold its value. And that's a good saying about gold that we all should remember, and I think it extends to Bitcoin as well. It's not that the price of gold or Bitcoin is going up, but perhaps it's the value of the dollar that's slowly going down. So how am I playing the Bitcoin or the gold game? Now, I believe that the biggest misconception people have is that Bitcoin is digital gold or gold 2.0. While others see gold as an ancient piece of yellow metal held only by boomers, to me, gold is the true store of value that has been time-tested for thousands of years. But Bitcoin is the ultimate lottery ticket for explosive growth. Now, if Bitcoin really gets accepted as a currency globally and they can get the transaction fees down, the adoption potential is tremendous, and that means the price of Bitcoin can actually double or triple quite easily. But on the other hand, we are beginning to see countries like China crack down on cryptos, and even the US government trying to regulate Bitcoin, and that is something that we all have to monitor closely, right? For me, I trust gold to store my wealth for the long term, but I don't want to miss out on what Bitcoin could really become. I have my lottery tickets ready. So there you have it, guys. Let me know what you think about the gold versus Bitcoin debate. Are you pro gold? Are you pro Bitcoin? Or do you believe like me there's a place in this world for both gold and Bitcoin as well? Let me know in the comments below. I really love to hear from you guys. I want to hear different opinions from people who are pro Bitcoin as well as people who are pro gold in this situation. And if you love this video, be sure to hit the subscribe button and as well as give this video a like. You know, I'll be making more gold, silver and even crypto videos in the future, and I really appreciate your support. Thanks for watching, and I'll see you soon.